I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome back to the show, and Merry Christmas, Mike.
Oh, thank you. Merry Christmas to you. Happy holidays to everyone listening.
Breaking news, Uber has lost $3 billion this year. So I guess the one thing that did get a ride out of town was their money.
That's right, and there's all kinds of funny stories coming out almost on a daily basis. Uber drivers are giving people drugs if they ask for them, and someone shot an Uber driver, just all kinds of interesting things. We don't have Uber where I live. My town isn't big enough, but when I go to big cities and I'm with, meet someone there or something, usually they're using the Uber, and I've never had bad experiences with it, but it does make you wonder what's going on.
Yeah, Vancouver doesn't have Uber either, but when I'm in other cities, I use it, and it's worked really well for me. But how do you lose $3 billion when you don't even own the equipment?
I don't know. It almost sounds like the Iraq War, or supposedly the United States flew airplanes of money over there, billions of dollars worth of money, and it vanished. So maybe they got the same people involved with Uber as they did flying these airplanes.
Exactly. So even though something looks new and shiny, you know how people like to throw their money into it, some caution there. The equity markets, as you said, over Christmas traditionally are pretty quiet, but so many people are worried that our new year will be just like the new year in 2016, where January and February were horrible for the equity markets.
Yeah, well, that's an interesting point, because I'm actually watching the market very carefully to determine whether or not we're going to get a dip of some sorts at the beginning of the year. I do think one is going to come at some point. It's just the way markets are. Typically, you do get at least a 10% correction every single year, even in the most bullish of years, and that was a dip, in January as it occurred. And this year we've had a powerful rally following the Trump election. It's kind of taking a breather right now, and in the back of my mind, I'm thinking, are we going to dip right at the beginning of the year like we did last year? And one thing that the most strong argument for that to happen is that right now, anyone that owns stocks really has no incentive to sell at this exact second, because they're really better off waiting until the next year comes. That way they can delay taxes on any of their capital gains and possibly even pay a lower tax rate. So that's a thing I think that helps keep the market from dropping at the moment, and it could be a reason for people to sell once January comes. So I think that's something that can hit the market, but it's probably not going to, that alone isn't enough to really cause it to drop as much as it did last year right out of the gate. I think what it would do is hurt some of the sectors that are kind of lagging since Trump won the election, but probably not impact the sectors outperforming, because what you'll see is money managers say, okay, even though I got a gain on this, it's not the big winner anymore, I'm going to sell it and buy the winners. And the sectors, some of the sectors particularly vulnerable are the biotech sector and the so-called FANG sector, which has been pumped endlessly for the past couple of years on CNBC. That's Facebook, Amazon, Netflix, and Google, the wonder stocks, and you can almost throw Apple in there too. These are stocks, though, that really, since Trump has won, they're lagging. And interestingly enough, the CEOs for many of these companies met with Donald Trump in person a couple weeks ago, I think it was last week actually, in his Trump Tower in New York City. A lot of them were backing Hillary Clinton. A lot of them have been vocal critics of Trump. Jeff Bezos, for example, he owns Amazon, and he also owns the Washington Post, which has launched nonstop attacks on Donald Trump. And even in an editorial, was comparing him to Mussolini. And then before the electors voted, they had an editorial saying the Electoral College might need to vote against him or do something to throw it to Clinton. So he said the thing that's interesting, though, is this meeting happened, and you can go read about it and look at the pictures, and Bezos is in the corner looking like a defeated person, and it doesn't really sound like any concrete initiatives came out of this meeting. And you contrast that where there's kind of a pale of gloom with the tech stock people and in Donald Trump in Silicon Valley, with oil companies that are soaring, with banks that are soaring. Go talk to someone involved in local banking where you live if you're in the United States, and you'll probably find they're excited about Trump because they think he's going to have interest rates go up at a faster rate than they had before. That'll help them make money. So it's interesting. There's like things I think are probably going to continue to lag that should be sold, and they could be hit a little bit in January, but I don't think it would cause as big of a drop as we saw at the start of the year this year, although I do think such a drop is likely to come. But before it does, we'll probably see the market averages go up a little more or spend a couple weeks going sideways. Maybe we'll drop in February or March or April. We can't really look that far ahead. But the thing about last year is going into the end of the year, there was a lot of internal weakness in the market averages, which was going into the last couple of weeks. It was trading that way, and that's not really happening this time. For example, last year the Russell 2000 actually fell in December, and this month it's not doing that. So I don't see the technical trouble that there was in December of last year setting up this year for a drop. I think we got to keep our eye on it for that to materialize at some point in the coming months.
Oil has remained over $50 a barrel now for at least a week or two since OPEC said it would cut back or freeze production at whatever it's pumping out right now. Do you expect that to continue in the new year?
Yeah, I think oil can. I don't think oil is going to take off and go crazy, but I do think the Saudi Arabia and OPEC want to keep the prices stabilized around these levels, and that alone is enough to help many oil stocks go up because they've been beaten down so much over the past couple of years. Many of them actually came out of bases following that OPEC meeting and looked like they could rally more. And you can just think back to what the mining stocks did this year to see that when prices stabilize and go up just a little bit in something, gold didn't make new highs, but it had a good rally. That's enough to really lift a sector up and create powerful rallies in stocks in it. So I think that's what we can see in oil stocks, and some of these things are so beaten down that, it's time for them to do that. It doesn't necessarily mean it's a brand new bull market. I'm skeptical it is. And I'll throw one idea that someone told me about oil and why Saudi Arabia might want to keep it at an elevated price for now, or at least not have it keep dropping. And that is that they're getting ready to launch the biggest IPO in history with Aramco. It's the Saudi National Oil Company. Now, the date isn't set on when this is going to happen, but the Saudi royal family and all these people in that country own parts of this company. It's this quasi-state company. So they want this IPO to do good. They want to make as much money as they possibly can out of it. And that's an argument for them to want to have oil at a good, higher level, because if oil continues to drop, then, the value of that IPO can fall too. That IPO is set to come out within the first 6 months of the year, and they're going to list it on the New York Stock Exchange, but now whole situation has come into question. According to the Wall Street Journal, in an article this week, the Saudis aren't quite sure if they still want to list it on the New York Stock Exchange because of this bill that was passed to enable the victims of 9/11, their families, to sue the Saudi government if there's evidence that they were involved in it. And the Saudis don't like that one darn bit. And then they also are not sure what to make out of Donald Trump. They were expecting Clinton to win, and so there's this added uncertainty. They're not sure what to think of the United States anymore. The article is even saying they're going to kind of freeze their investments for until they figure out what's going on. But the bottom line is they're trying to figure out, do we want to list the IPO in the States or list it in London or somewhere else, or do we want to wait? And so we're not quite sure if the IPO will even come out next year, 2018, but it does. I do think it is something for anyone interested in oil markets to keep in mind, because the Saudis would also still like to see American fracking companies completely destroyed and demolished. That was a stated reason that the Saudi oil ministry gave in 2014 when they allowed the oil prices to begin to dump as they did, and that operation isn't really complete yet. The American oil fracking companies aren't completely eliminated. You really need another drop in oil for that to happen. Doesn't mean oil has to crash, but it needs to go back down and spend more time at lower prices. So that could be something that happens after the IPO comes out. So if I think oil is a good play. The oil stocks are a good play until this IPO comes out, whenever that may be. That could be in sometime this coming year or the year after, but it's just something to keep in mind.
Two, something people should be aware of. Most of the propaganda movies made about how bad the Alberta oil sands are, how bad fracking is, are financed by companies associated with Saudi Arabia or that trading cartel in that area.
Oh, you better believe it. And, you know, I'm not going to say they're dumb people. They're smart people in Saudi Arabia, but they also hire the greatest propagandists, and, you know, they got spies and all kinds of stuff that they got working for them that do all kinds of things. So I wouldn't be fast enough to be doing something like that.
We'll have more with Mike Swanson right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Mike Swanson. Mike, will gold bugs be disappointed this Christmas?
Well, Christmas is only a couple days away, so I think so, unfortunately, but that story could change next year. Gold was a fun ride from February to this summer. The gold stocks were the leading sector in the entire stock market during that period of time, and even with the pullback they've had since that summer top, they still are one of the top performing sectors year to date. It's just the rally was so tremendous. It was really a fun thing to be a part of. But since that peak, you know, we've had a big correction. There's no doubt about it. And I've been surprised myself on how long it's been going on and how far down the gold stocks have gone. But corrections and drops, they do lead to buying opportunities when they come to an end. I was thinking it would likely come to an end around the Fed meeting, which was the other week, and we'd get a nice rally at the end of the year, but that doesn't seem to materialize, and it doesn't really look like it's going to happen before Christmas. So I think we got to wait and look for the first couple months of next year for, you know, a turnaround and the start of another real big rally. That doesn't mean they're just going to go lower and lower and lower. I'd expect them to bottom out if they haven't already and build a base to launch a rally off of. If you look at what they did going into the end of January when they started their massive rally, they really were forming a base from July of 2015 until January of 2016 every couple months. So I would like to see, a repeat of a base building process to launch a big rally off of. The thing about gold is it's very easy to get caught up in predictions people make about where gold's going to go. So, for example, in the summer, I was real excited to own gold and hear of predictions for $10,000 an ounce, let's say. And that was a fun thing to think about. And then just last week, I saw a different person, say gold's going to go to $200 an ounce, and this drop in gold is evidence that we're headed for as this person was saying, a complete and total economic collapse. I was like, man, you won't even be able to go to the grocery store the way this guy's talking. I'm going to have to buy some beans and stock up on them so I have something to feed my belly when his collapse comes. The point is, there's always, the gold is something that really sparks all kinds of emotions in people when it goes up and down. And in the end, it's sticking to the charts and the price action, which is the thing to do, because gold provides an opportunity to make profits, when it goes up, because the stocks make tremendous moves to the upside, and that's why it's worth for most people to own core positions in gold and even the mining stocks. And the thing I look at to indicate that we're going to see a turn is, again, the formation of a base over a couple weeks and then a breakout, and also want to see the gold stocks outperform the metal. I plot out a relative strength ratio, and it hasn't stopped a downtrend that has been in place since the summer, but I'd expect that to happen sometime in the next couple of weeks. And then the last thing worth looking at is the Commitment of Traders report, which shows you the size of positions that commercial operators have in the futures market. Why this is important is this includes the mining companies themselves, giant traders, and that use the futures market to hedge gold that they're producing to lock in prices, and they tend to be right at important market turning points. So in the summer, at the peak, they had actually created the biggest short position they ever had in history in the commercial market there. And it was over 300,000, and as of Tuesday a week ago, the information is delayed when it comes out, so that's the latest information I have. They're down to 140,000. I expect it to be a little lower because of the recent drop after the Fed meeting, but historically, key bottoms come in when that gets down into the 40 to 80,000 range, and last January it got down to as low as 7,000, which was that might have been a historic low. It was as far as the data I have going back 20 years is concerned. But the point is, we'll probably have to take some time to see more commercial liquidation of their short positions to really set the stage for the next big rally. But it's coming, it's just a matter of being patient, and doesn't mean gold is going to crash to 200 or even go below 1100. I really don't know if it'll do that or not, but I certainly don't think there's huge, massive downside here.
Well, whatever the price this year, Russia and China continued their gold buying spree, laying their hands on every ounce they could find. Do you expect them to continue to do that?
Oh, certainly. Especially China. You look at China, and if you want to look for, let's call them high-risk spots in the global economy, you've got to look at Japan because of their debt situation, and the yen is now dropping again. But you also got to look at China, and we're seeing them come under pressure with their currency just in the past couple of days, following the Fed decision. The yuan took a dump, and it's probably a situation that's going to continue. China was in the news as big time in 2015 in the summer, as people were really worried about these things for a few weeks, but really people have forgotten about it. But the Chinese stock market's still in a very vicious bear market. Actually, you're asking about, are we going to see a January dump for the stock market like we did this year? I said I don't really think so at the beginning, but the Chinese stock market is actually in a position to dump after New Year's. It's just trading right on support. Looks kind of scary. So the important point when it comes to gold is the people in China, they're suffering when their yuan drops, and they know their stock market just is crap now, and there's trouble, and that's the reason they're buying gold. You know, these Chinese people are smart investors. They know, what's worth buying and what isn't, and when you have bear markets, it's hard to lean against that.
Mike, have yourself a great Christmas, and I hope you and your family have a terrific New Year.
Oh, will do. You too. It's great talking with you, and we'll be back next year.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. On YouTube, we're Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. Have a great holiday, everybody. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.